Welcome students to another lecture in the series. Greetings of the day. Let us continue with the concept of perquisites from the head income from salary. Now let us study a value of car in this class, like how to calculate if a car is being provided by the employer to employee, how to calculate the value of that perquisite. For the value of car, computation of taxable value of car when the car is owned and hired or hired by the employer and is used by the employee. The first case. If it is only for official use, then it is not taxable. If it is for personal use by him and his family, then it is taxable for specified employees. Then the taxable value will be equal to all running and maintenance expenses on car paid or reimbursed by the employer plus the depreciation at the rate 15% if it is owned by the employer. Then partly for personal use by him and his family and partly for official use. Then it would be taxable for specified employees and the taxable value shall be determined separately. If the employer maintains proper separate record of expenses for official use and private use, if the employer does not maintain the proper separate record for official use and private use, then in that case the taxable value can be computed in this manner. If the running and maintenance expenses are incurred by the employer, then in that case for this, if I talk about the specification of car up to 1600 cc, it's rupees 1800 per month plus 900 for driver. And if the capacity of the engine of the car is more than 1600 cc, it would be 2400 per month plus 900 for the driver. Second case, if the running maintenance expenses are incurred by the employee and not the employer, then for up to 1600 cc it is rupees 600 per month plus 900 for driver. And if the car is having more than 1600 cc, it would be rupees 900 per month plus 900 for the driver. Second case, if the car is owned or hired by the employee and running and maintenance expenses are incurred by the employer and car is used by the employee. In that case, first, if it is for official use, it is not taxable. Then second, if it is only for personal use by him and his family, it is taxable for all employees and the taxable value will be equal to all running and maintenance expenses on car paid and which are being reimbursed by the employer. Third, if it is partly for official use and partly for personal use by him and his family, then it is taxable for all employees and the taxable value can be determined separately if the employer maintains a proper separate record of expenses for official use and private use. If the employer does not maintain proper separate record for official use and private use, then the taxable value can be calculated like this. If the car is up to 1600 cc, then the actual running and maintenance expenses incurred by the employer, or you can say 1800 rupees per month plus 900 for driver. If the car is more than 1600 cc, then the actual running and maintenance expenses incurred by the employer are rupees 2400 per month plus 900 for the driver. Then let us have a look to a question. During the previous year, 2014-15, Mr. Nitin enjoyed the following allowances or perquisites in addition to a basic salary of rupees 30,000 per month. He's having a car facility of 1.6 liters for private and official purposes. All the expenses are rupees 1,50,000 including salary of the driver, which are borne by the employer. Mr. Nitin was made to pay a token amount of rupees 500 per month for this facility. Loan of rupees 5 lakh for personal purposes at the rate 10% per annum received as on 1st of June 2014. It was receivable in 5 half-yearly installments of equal amount starting from 31st of December 2014, and SBI charges 16% per annum for similar loans. So we need to compute gross salary of Mr. Nitin for the assessment year 2015-16. Let us see. We can begin with the basic salary, that is 30,000 per month for 12 months, which will account as 3,60,000. Then we can have a look towards the car facility. As the car is of 1600 cc, 1.6 liters, so we will count it for 1800 for the running and maintenance charges and 900 for the driver for 12 months, which will be calculated as rupees 32,400. Then we need to deduct the amount which is being recovered by the employee, means whatever amount the employee is paying. He is paying rupees 500 rupees per month, so we will be subtracting 6,000 from it. Then we do have a concessional interest on loan, that is 17,500 plus 7,500, that is 25,000. So the gross salary here in this case is 4,11,400. Let us have a look to the working notes. Car facility: when expenses are paid by the employer and the car is used by the employee both for official and personal use, the taxable amount is rupees 1800 per month plus 900 for driver if it is provided. Then interest on loan is taxable as per the rate which is fixed by SBI in excess of the concessional rate at which the employee gets the loan. Therefore, in this case, the interest will be calculated 6% because the interest which is charged by SBI is 16% minus 10. So it will be calculated at 16%, 6%. Then calculation of interest on loan from 1st of June 2014 to 31st of March 2015. In all, if we count for, there are 7 months. So 5 lakh at the rate 6% for 7 months, which will be calculated as 17,500, and for 3 months we will calculate it separately, so it will be calculated as 7,500. So if you total it, you will get 25,000 out of it. Then further we have the value of leave travel concession, that is LTC section 10 subsection 5. Leave travel concession is exempt for 1 year in a block of 4 years, and concession is only for travel, only on travel tickets by the shortest route to and fro for the employee and his family members, and family members may include the spouse, children of the employee, and parents, brothers and sisters who are wholly and mainly dependent on the employee. So for this purpose, block shall consist of year from 2010 to 13, from 14 to 17, and also the exemption shall not be available to more than 2 surviving children of an individual after 1st of October 1998. However, this rule does not apply to those who are born before this date and can also in case of multiple births from births after one child. Then value of education facility as per rule 3. Let us see. The children education allowance is exempt up to rupees 100 per month per child for maximum up to 2 children. Hostel expenditure allowance is exempt up to rupees 300 per month per child for maximum to 2 children. Then we have education and research or academic allowances for self. It is exempt to the extent which is spent on such purpose, and balance unspent amount is taxable. Educational facility to children of employee in the school or college which is maintained by the employer himself. Then in that case, cost of education in similar institution in or near the locality up to rupees 1,000 per month per child is exempt. Education facility for such members of employees household in any other education institution by reason of his being in employment of that particular employer. So in that case, the tax treatment would be like this, that the cost of education in similar institution in or near the locality up to rupees 1,000 per month per child is exempt. Here in this case, we need to keep in mind that if any amount is paid or recovered from the employee, that the value of the benefit shall be reduced by the amount which is paid or recovered. If the cost of education exceeds rupees 1,000 per month per child, then the whole of the amount shall be taxable in the hands of employee, and no deduction of rupees 1,000 per month shall be allowed. And the payment which is made directly by the employer to educational institution is taxable in the hands of employee. Then in the next, we do have value of health club or recreational facility, which is exempt from tax if it is provided uniformly to all the employees alike. Then value of food and snacks, the type of meal which is provided. Suppose if it is a refreshment in the form of tea or coffee during the working hours, then it is exempt from tax. If there is lunch during the working hours, it is taxable above rupees 50 per meal, means it is exempt up to rupees 50 per meal. Then lunch or dinner which is beyond normal working hours for official work, it is fully exempted. Lunch or dinner at official sites or at places which is not normal place of duty, it is also exempt from tax. Thank you. If you have any doubts related to the concepts that we have studied in this video, you may write to me. Thank you.